so in love with you.
Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and today is that wonderful time of the week where I give you guys a housing market update, which, as you guys know, is my absolute favorite type of video to make. And a few points that I'm gonna make today is how the current market is exposing investors with their pants down. I'm going to show you how close Opendoor is to filing bankruptcy as a result of their inability to sell their houses. And I'm going to show you guys how to put your realtor to work and how to use the data they provide over emotion. And I'm going to do all of that by accessing my live local multiple listing service. Now, after that, we're going to talk about everything interest rates and what a week of interest rates. Then we're going to jump into inventory. After that, we're going to do my new and most favorite segment, which is a comparison from peak to right now. So I absolutely love that comparison. I want you guys to at least watch that part of this video, but then we're going to conclude with some shout outs and some final thoughts. But remember, you guys, I'm not a financial advisor, even though my bio is as someone that's renting, someone that's had a foreclosure, bankruptcy, and repo, someone that purchased a home overvalued in 2008 and I got trapped. That's who I am. That's my bio. And another thing, guys, I'm also a realtor, loan officer, and instructor in all things real estate. But this is my personal YouTube channel where I like to just vent and rant and really kind of just speak into specifically first-time homebuyers. I don't care about investors. I'm talking to first-time homebuyers because, again, you guys, they are the biggest at risk of getting a bad deal. So anyways, for all of these goals, for all of this effort, please, guys, like this video, subscribe if you haven't already, and don't leave me hanging. You guys know I need to hear from you. So just shoot me a quick comment below. Either way, guys, let's hop into my local live MLS right now. So this part of the video, what I'm gonna do is access live data by accessing my local MLS as a result of me having my realtor license. And while there, I'm gonna show you guys all of the new builders right now that are absolutely slashing their prices. It has spread to new home builders that we've been watching and waiting for price cuts. And then I'm going to show you guys, and this is absolutely crazy, I'm going to show you guys how much inventory Opendoor actually has right now. It's an astronomical amount of homes right now that they have. Okay, so as you guys can see, this is my local MLS right here. And obviously I can access any of these cities very intimately, guys. I can access this whole entire area, but I've been keeping my viewers in one area, which is north of Houston, south of New Caney. And the reason I'm doing that is because we have limited data, and essentially it's in Kingwood. Now I have gone a little bit to Tastasita, Humboldt, Porter, a little bit New Caney, but essentially this is the only area right here, this little small area that I've been using because I don't want to manipulate any of the data because it's really easy to manipulate this data. So I figure as long as I'm using just one local housing market, you guys can see what's going to happen in your own local housing market. But what I want to pinpoint is I want to take a look at new build communities. Now, here's two communities right here. Here's one community, another community right here. Now, this builder has been especially stubborn at cutting their prices. So I want to show you guys that they are finally starting to slash their prices. Take a look. And this is all by Liberty. So here's one right here, guys, with over a $22,000 price drop. So they went heavy, right? Normally what they do is they'll start low, but this builder is probably starting to figure out that they cannot sell their homes at $163 a square foot. Here's another one right here with a massive price cut, not as big as the other ones, but this one again, they're dropping their price per square foot to $156. Here's another one right here with a slight drop. So you can see that this builder's probably lowering their target sales price to about $150 to $160 a square foot. Very interesting. Let's look at this neighborhood now up here, and let's take a look at these price cuts. And remember, none of these had price cuts just a week or two ago. So this is all recent stuff, guys. Let's look at this one. So this is almost a $30,000 price cut right here. And you can see this, look, $143 a square foot. So they're actually cutting this inventory even more. And the reason that probably is it's a bigger house. Normally, the bigger the house, the less price per square foot you actually get. Here's another one right here. And look at this. This is a pretty nice price cut. This is about $30,000 price cut as well, going down to $151 a square foot. You can see it's not as big as that last one. But again, you guys, Liberty is absolutely slashing their prices. So I hope no one bought in this community in the last 2 months, because if you did, You probably paid way too much. Now, what I want to do, guys, is let me take you to this community across the street right over here. Now, you may notice that where'd all the inventory go? Y'all see this? Do y'all remember my videos where there was a whole bunch of inventory here? It's gone. It's absolutely gone, right? And I cannot figure out what happened to it. I'm thinking this lot of houses right here was just purchased by an institutional investor because the inventory is gone in 2 weeks. It's just shocking. So let me take you to this community now over here. And what I also want to show you over here is there's actually more inventory. So Lennar actually put more houses on the market. Even though they can't sell their existing houses right now, they've still put up additional inventory. So I wanted to show you guys that even though they can't sell, they're still building. Now let's look at some price cuts. Now again, this is a Lennar community. Let's see if they're still doing some pretty tasty price cuts. This is decent. This is $11,000 price cut, and it looks like new builders are lowering the price per square foot to about 150. Do you see that? And this is a different builder right here. Let's take a look at this house. This house is now listed for 290. So this went down, only $5,000. So not really too much going on right there. So so normal price cuts here, guys. All of that has been knocked down about 10 to 15%. But again, what is especially astonishing to me is all of the inventory that was right here. There's nothing here. This is a resale house. This isn't even new. They have sold all of this inventory. Isn't that not shocking to you guys? And again, up here, the same thing. There was a community right here, new build community. Okay, they're missing almost all of their inventory. Let's check out what they do have. Okay, so you see these people are already doing price cuts as well. This was a price cut of about $10,000, dropping the listing price to $168 a square foot. So as you guys can see, the prices are being slashed pretty much by all builders now. The stubborn builders held out, but again, what is especially alarming, and this is really what I've been trying to get to the bottom to, is there used to be like double the inventory right here and it's completely gone. So I'm going to have to do a lot more research on that just to see if institutional investors are the ones that are buying that. So now what I want to do is, before we get into Opendoor, I want to show you guys essentially how to use the data to make a decision to buy instead of your emotions. Okay. Now, if you do have a realtor right now, and again, I'm not saying buy right now, but I definitely want you guys to be equipped to essentially put you ahead of these heartless investors, if you will, right? Not all investors are heartless, but they are a dime a dozen, and normally they are. So it is what it is, guys. So I really want you to pay attention to this next part, because I'm going to show you guys essentially what a simple market analysis looks like as far as using price per square foot. So again, this is exactly what I want you guys to do. If you have a realtor right now, I need you guys to start having them do market analysis so that you can understand and look at the data to base your decision on purchasing a home versus using your emotion, right? In other words, we need to understand what a great deal is. Let me show you how to do that. All right, so I have done all the legwork already, but again, you're gonna ask your realtor to do a market analysis on whatever city you want to invest in. I selected Kingwood, and then I selected a search date of January 2021 to December 2021. So essentially, this market analysis is telling me how much the average house sold for per square foot, which is $126.39 in 2021. So I know that if any houses in 2022 are listed for under $126 a square foot, I know that they're selling for less than the average in 2021. Now, obviously, guys, this is just 2021, but you know that it's $126. My recommendation is you go back to 2019. So get a market analysis done in the area that you want to buy in for 2021, 2020, and 2019 so that you can see all of the data. Now, once you have the data, this is what you do next. And this, again, is what you're going to ask your realtor to do. Essentially, send you active listings that are broken down by price per square foot. So I'm going to select the active listings right here. I'm going to put in Kingwood. And again, you guys, I cannot reiterate this enough, but this is what you need to have your realtor do. I'm going to hit results right here, and I'm going to categorize by price per square foot. So I know that all of these houses right here are selling for under 2021 averages. So now we have, just to put this in perspective, we have 9 total houses that are selling for under 2021 levels. And you guys know when I first started doing these videos, I was always on the lookout for $120 a square foot. We have now several options at with properties under $120 a square foot. And again, you guys, the most beautiful thing about all this is I'm staying in a very small, hyper local housing market. I can't manipulate this data because it's such a small area. So again, I have multiple houses now that are selling for under $120 a square foot. So if I wasn't a super strong person, I might actually go out and purchase these houses. But again, I am not doing that because there's still a lot more room to go with prices plummeting. So I wanted to keep that part brief, guys, because I don't want to put too much empowerment of your hands, because the most important thing right now is people pump the brakes, right? Pump the brakes and understand what's going on. But now, you guys, let's hop into my local MLS again, and let me show you the amount of inventory that Opendoor has. Now, if you're a realtor and you're wondering how to find, how much inventory Opendoor has, all you usually have to do is find out the listing agent on one Opendoor property, because normally Opendoor uses the same listing agent for all of the properties in that specific housing market. So here's a listing right here, guys. Now let me click on this. And again, if you're a realtor, this is all I'm doing. So I'm going to scroll down here to find out the listing agent's name. Do you see that? Here's his name right here. So after that, what I do is I go back to HAR and I click agents. I'm going to paste his name here. Let me search. Okay, here he is right here, Opendoor Brokerage. Let's view his profile. All right, now I'm going to click listings. Look at this, okay? 763. You guys, Opendoor right now has 763 listings in my local housing market. That's shocking. And all of them under this man right here. So again, if you want to know what Opendoor owns, you can either go to their website, you can do things like that. But what I do is I'm just following the listing agent around, because more than likely they have hundreds of listings from Opendoor. And again, you guys, 763 listings may not sound like a lot, but when it comes to local markets, 700 properties can massively change that housing market. So in other words, Opendoor has enough inventory right now to drastically change the market in Houston. If they want to sell all these houses for 50% under market, they're going to change the entire housing market in Houston. Now take a look at this. Look at how many properties from Opendoor sold. This is insane, you guys. That means look at all these people that used Opendoor and sold their house to Opendoor. I mean, Opendoor is a flipping industry, and it's been proven that you make less money by using Opendoor than you would if you used a traditional realtor. So what I see here is over 3,000 people got ripped off from Opendoor. That's an insane amount of listings to sell just for one person. Do y'all agree with that? Isn't this insane? I don't know. It's pretty insane to me. So now what we're going to get into, guys, is let's jump into everything interest rates right now. And where I want to start out with is our poll. All right, guys. So here is the poll. And here's the question. According to Fred, will Thursday's updated 30-year fixed rate mortgages be higher or lower than the current average of 7.08%? My thought was lower. Now, here's the thing. 67% of people disagreed with me, and we had 3.4 thousand votes. So just real quick, guys, you probably already know the interest rates are lower. So when I see 67% of my viewers, my subscribers, saying that rates were going to be higher, that hurts my feelings, guys. That really hurts my feelings. Are you guys paying attention? Pay attention. It's super important, guys. This is a huge transaction, but let's take a look at where rates are right now. But again, remember, guys, vote on the poll that I'm going to issue after this video. All right, so remember, I'm using Fred Economic Data 30-year fixed rate mortgage average in the United States. This updates every Thursday. That's why I wait till after Thursday to do my housing market update. And as you guys can see, the interest rates average actually went down big time. It went from 7.08 average to 6.61 average. And that represents a 47 basis point decline, or increased purchasing power of 4.7%. Okay, but here's the thing. Now, a lot of people may actually freak out and say, oh, the interest rates are low, it's time to buy again. But that's not necessarily true. And the reality is, guys, is interest rates are not going to have to go as high any longer. And the reason that is, you guys, America is becoming even more broke. So in other words, even if interest rates drop to 4% tomorrow, there's still an overwhelming amount of people that are going to stay stuck on the sideline because they're broke. Look at the savings rate. And this is the point I want to make, guys. And again, so even if interest rates do go down, it's not going to matter for a lot of people. This is the personal savings rate with Fred once again. And as you guys can see, this updated October 28th, and it is all the way down to 3.1%. So the saving rate is 3.1%. This is the lowest it's been in over 10 years, guys. So in other words, American households are more broke right now than they have been in the last 10 years. And that's why I'm saying, even if interest rates don't get to 10% or don't get to 9%, don't worry about that, because the reality is there's a lot of people that do not spend their money wisely and that are no longer qualified to purchase a home, even if they want to. And again, the reason that is unaffordability is ravaging America. So is inflation. So is the quantitative tightening. So, the interesting thing is when the Fed pivots, it's going to be interesting to see how many things they had to break in order to get home prices back to a more affordable level, which they are not right now. So here's this morning's treasuries. Now, here's one of the primary reasons that interest rates went down. Look at the 10-year. The 10-year is now well under 4%. When it's over 4%, generally the interest rates are going to get up to about 7% as far as residential mortgage rates. But this dropped back down significantly after the CPI report came out of 7.7. And the reason it dropped is a lot of people were expecting a 7.9 per se. And the fact that it went to 7.7, everyone rallied and everyone got excited and threw a whole bunch of money back into the stock market. And essentially this plummeted. And again, you guys, what I am saying is that's not warranted. The Federal Reserve just said they may raise their benchmark to 5 to 7%. Okay, so no one is saying the Fed is pivoting, and so the Fed is not saying they're pivoting. The Fed is not saying they've successfully combated inflation, and we don't even have a confirmed recession. And look at all these economic indicators that are signaling a recession. Everything right now is inverted over this 10-year. Everything, even the 3-month. The 3-month inversion is shocking. Completely shocking inversion of the 3-month to 10-year. So in conclusion of the interest rates, guys, I suspect that we're going to have a moderate decline in the average interest rate next week. So again, I'm going to shoot a pull up. I'm going to say it's going to go down slightly. The interesting thing is that's the second time, only the second time the poll has been wrong. So I've been wrong 2 times. Now the poll has been wrong 2 times. And it's really hard to figure out what's going on when we guess so far in advance, right? So if we're guessing on Monday and then Wednesday, the CPI report comes out, that can flip everything. So it is hard, but I thought that was very interesting. Please go to my community tab and vote on the new poll. So the next part of this video, let's jump into inventory. And what I'm going to do is pull up Fred economic data and also Redfin. But I have some good news. As you guys can see here, this is the housing inventory for the active listing count. So this is not including pending. And the really cool thing is, right, and I didn't think it would go up month to month, but it went up from September from 732,000 units to 753,000 more units. That represents an increase of 21,000 more units from September to October. So more than likely, guys, it will not go up in November and December. Historically, it just shouldn't. It never does, like never, ever. But if it does this time around, that is a more indication that crushing demand is outpacing limited supply. So let's keep our eyes on that. But one thing I also want to point out, guys, is as a result of the declining sales, we don't need as much inventory. So the fact that it's at 753, but home sales are down over 30%, that means this may be enough units to match where we were at pre-pandemic. Because remember, if people aren't selling their house, then we don't need as much inventory, right? Because 76% of people that sell their house purchase a new one. So now that sales are down, quite frankly, we don't even need that much inventory to catch up. Do y'all see what I'm saying? But now let me show you something absolutely shocking about the months of supply. Take a look. And y'all look out for my next Redfin video. Oh, I got some insane new data. I'm so excited. This was a good week to week comparison, but I wanted to show you guys overall. Okay. Now, The months of supply takes into account demand. So this is a very important measure as far as inventory right now. It's very practical. And right now, you guys, we have skyrocketed up to 3.6 months of supply. And you can see it skyrocketed up in just 1 week. It went up 0.3 months in 1 week. Last week we're at 3.3. This week we're at 3.6. This is a tremendous improvement. We have not had this much months of supply and months of inventory since 2020, about June 2020. So about right here. So in other words, you guys, what the Federal Reserve is doing is working really, really well, because all of this stuff is happening really, really quickly. Remember what leads what? So interest rates lead everything, right? For the sake of argument, we're just saying it leads everything. So first comes interest rates. The next thing that is affected is sales and construction. Both of those down. After that is normally inventory. Inventory is exploding almost triple digits in many of the big metro areas. After inventory comes prices, and that's exactly what we're seeing right now, guys. And that's why I'm saying if you can hold out in purchasing, you should hold out, because we are not even close to the bottom yet. But now, guys, let's move on to my favorite thing to talk about, which is a comparison from peak to current, just to show you guys how well you've done so far if you've been waiting. All right, so we're gonna do our comparison. Now, in order to do that, I have to tell you guys where we were at the peak, which was at $392,000, as you can see here. Now, fast forward to today, and this is still not updated, so I'm gonna access the article right here. And as you can see right here, guys, the new median sales price went down. I repeat, it went down again. This is a beautiful thing, to $357,500. Now let's look at interest rates. So as you can see right here, in June, when the housing market peaked at $392,000, the average interest rate was 5.78%. If we fast forward to today, we're going to use 6.61% with today's calculation. Now, the next thing, I just typed in mortgage calculator on Google, and this came up. So let's put in the sales price. And again, you guys, I know the sales price is not the loan amount, but we're doing this just to keep it simple. So if we change this to 5.78, you guys may already know by now what the payment will be. So in June, roughly your mortgage payment was $2,292, and roughly your purchase price was $392,000 back in June. Now let's fast forward to today, and let's change the loan amount to $357,500, and let's change the interest rate to 6.61%. Now, as you can see, the payment, the average payment right now, if you purchase, is going to be $2,286. And you guys, here is the really, really important thing to understand right now. If you waited, okay, if you waited from June to right now and you buy, your mortgage payment on average is about $9 cheaper. Not a lot, right? But a little bit cheaper on your mortgage payment. But here is the really super duper important thing. Not only is your mortgage payment cheaper, your sales price on average is going to be lowered by $34,000. Again, you guys, I don't know about you. I'm not a rich person. $34,000 is a ton of money. So again, more than likely, people that purchase in June are upside down over $30,000, because remember also, in order to sell your house, you're normally going to pay about 8%. It's completely awful. It's terrible, but figure 8% and then do the math from there. Now, real quick, guys, before I jump into the shout outs, I got some blowback when I posted my sell last week. People were like, oh, you're a bear trader, blah, 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 blah. But, you know, a reason I sold my teledoc is I believe that last rally that we had was fake. No one said we should rally, and I believe the Fed is going to punish us as a result. Now, I sold over 500 shares at $33. 1 week later, it's at $29.69, so I saved myself about $2,000. All right. And again, you guys, I know there's rich people where $2,000 is not a lot of money, but to me as a normal person, $2,000 is a lot of money. Comment below. Let me know if you think $2,000 is a lot of money, because I definitely think $2,000 is a lot of money. And if you don't think it's a lot of money, y'all, please do me a favor. Hit that super chat or, you know, the donation tab or whatever it is, and send me a couple grand. I need it because my channel just got demonetized and I'm still fighting that right now. Completely unbelievable. Now, this week's champion goes to Julius Magno once again. You guys, this is a 3-time defending champion for first place comments. Brother, I just want to let you know I appreciate you. And I appreciate everyone that tries. You guys have to understand that this YouTube game is very, very hard. So, you know, especially with mental health, right? I see all kinds of content creators getting burned out and going through this. So you guys, you know, doing that for me, that means a lot. Y'all may not feel it, but I feel it. And I really, really appreciate it. And I want to say to everyone that's doing that, and my man Julius, thank you. I believe home prices have a lot more room to plummet. Now, I understand some people have to purchase for various reasons. And I also understand that renting is a waste of money. So for any of my viewers that have recently purchased or that are in the process of purchasing, although I can't personally in good conscience recommend it, I will say that you are at least way, way better off right now than you would have been if you purchased in June. And not just because payments are lower right now and purchase prices are lower by 34 grand, but the biggest reason, guys, is we have a lot more options. We don't have to settle anymore. Plus, now we have an overwhelming amount of buying incentives. So imagine the landscaping of the housing market once the recession is confirmed, once the unemployment rate skyrockets, once an foreclosure wave hits, and once we start getting hyper inventory. More than likely, that's going to create additional price decline for the months and possibly years to come. Now, other than that, guys, I really hope you guys got some value, perspective, and insights from today's video. And if you're out there investing in real estate, you know I wish you luck and I hope you win.